Hey guys, and welcome back to the ASX Investor channel, and welcome to another interview. Today we'll be diving back into the lithium story. The EV battery material space has been getting a lot of excitement around it. We'll be discussing Jindalee Resources. ASX JRL are playing on the intersection of a number of really fascinating tailwinds with their flagship McDermitt Lithium project. We know about the onshoring of critical strategic minerals. We also know about the fact that electrification and decarbonisation, the trend is here and continuing to arrive so rapidly. Jindalee Resources have got a range of different projects as well. It's not only McDermitt, and today we'll be unpacking that entire story. We're really grateful to be joined by the Executive Director, Lindsay Dudfield. Lindsay, welcome to the channel, mate.
Yeah, no, thanks very much for the invitation and the opportunity to present to your investors.
Fantastic. I guess before we dive into all the specifics and the news flow, if you can just give us that overview of who is Jindalee Resources and what's the offering that you currently have.
Okay, so look, Jindalee Resources, we're a project generator. We've been very successful over the almost 20 years that we've been listed. Actually, we listed on ASX in 2002. I founded the company way back then, and you know, we started off as a gold explorer with backing from the Canadian mining house Teck, who were interested in some of our gold projects in the eastern goldfields of Western Australia. About 2004, we identified uranium as actually having a really good opportunity. You know, there was a window of opportunity opening in Australia. And so we late 2004 started acquiring unloved uranium prospects in Western Australia, and then moved into the Northern Territory and acquired a huge land position there in what's known as the Nalia Basin, and then acquired a controlling interest in a historic uranium deposit called Bigley, and that we then put all of those uranium assets into a subsidiary company. We named it Energy Metals, and that was spun out as a priority entitlement to Jindalee shareholders, listed in I think it was September 2005, and was a fantastic success. The timing was great. The 25-cent shares that our shareholders had subscribed for. They opened at 75 cents, and I think they peaked at about $8.50 or something. Prior to the GFC. Jindalee also retained 40% of Energy Metals, and so when post GFC, at the time they were called the China Guangdong Nuclear Power Company, came and approached us for a friendly takeover, or certainly proportional takeover of Energy Metals. We folded 70% of our stake into their offer, and with the cash we were able to pay a fully franked dividend to Jindalee shareholders at a time when during the GFC cash was quite valuable. And we also held a bit of cash back, looking for the next opportunity. We've looked at a lot of things since then, and then identified the McDermitt project as being probably the next successor to our Energy Metals opportunity. And look, as it's turned out, we've got the timing and the jurisdiction pretty well right, and it's looking like a really good project. We think it'll be a transforming project for the company, in much the same way was at a smaller scale Energy Metals was back in the mid 2000s. So we're kind of unusual, because we've been self-funded to a large extent through our project generator activities. We've got very few shares on issue. We've got about just over 57 million shares on issue. And as I said, we paid a 55-cent fully franked dividend to our shareholders after the sale of our Energy Metals stake. And at the moment, I think we'll probably mention it later in the interview, but we're also looking to divest all of our Australian assets, put them into a new company, and spin them out with a priority entitlement, in fact, a pro rata entitlement to Jindalee shareholders. So, we think that makes a lot of sense from a corporate point of view. We think it'll generate, it's a bit of a bonus for our existing shareholders. Any shareholders that, or investors that buy Jindalee shares now will qualify for that distribution. So that's one to watch out for.
It's a fascinating story, and I appreciate you taking us through the history as well. So congratulations on what's been a really successful past 2 decades. I guess organically that leads us towards the McDermitt Lithium project. It's actually the second largest resource in the United States, not too far away from Tesla's work in their factory in Nevada as well. But I'd love just that overview. What is the McDermitt Lithium project? You've got 10 million tons worth there, and why are you so excited about it?
Yeah, look, it's a new style of mineralisation, an emerging class of lithium deposit, if you like. So everyone's familiar with the pegmatites. That obviously Western Australia is, a major producer of lithium from pegmatites, the spodumene mineral that forms within pegmatites, and also North American investors in particular are familiar with brine deposits because there's the so-called lithium triangle. Chile, Argentina, and the southern part of Bolivia, where there's a lot of brine deposits are currently being exploited. But there's a very large style, a style of mineralisation, which is kind of like almost like a brine deposit that's been exhumed, that's been basically uplifted, dried out, and sitting there. Well, in our case, it's sitting there at the surface. And these are the sediment hosted, or some people call them claystone, lithium deposits. And as I said, they're an emerging class of deposit that in the Western US in particular is very lucky in that they have seem to have the lion's share of the style of mineralisation. And as I said, they're emerging style of mineralisation. There are 2 advanced projects that are permitted and looking for funding to basically embark on production, and they're the Australian investors will be familiar with the Rhyolite Ridge project that's owned by INR is the code. And there's the largest one in the United States, the largest lithium deposit in the United States is called the Thacker Pass deposit. That's owned by TSX listed company. Actually, they're also dual listed on New York Stock Exchange. And they're called Lithium Americas, LAC is their code. And they're the 2 most advanced projects in sediment hosted lithium projects. And so we're following in their slipstream, if you like. As I said, actually you said at the start of the interview, we've currently got the second largest deposit after Lithium Americas. And we're moving on de-risking that, more drilling, more metallurgy to demonstrate the financial kind of strengths of the project to the market.
And so for those investors who might not be as familiar with it, in terms of initially the extraction, it sounds like your deposit's right near surface, so that makes it easy, but also the refining then of the sediment hosted. What are the pros and cons in comparison to the more familiar spodumene or brines?
Yeah, look, there are 2 processing routes for currently conventional routes for processing sediment-hosted lithium deposits. And I should say right from the start, there are currently no commercially operating examples, okay? But the 2 most advanced ones, which I mentioned, they're proposing to leach the lithium out of the ore using sulfuric acid, and then you wind up with what they call it a PLS, a pregnant liquor solution, which not only contains a lithium in solution, but a whole bunch of other anions, magnesium, sodium, potassium, etc. And then those, if you like, contaminant ions or metals are progressively dropped out of the solution, and then that leaves you with hopefully a battery grade pure high lithium solution, which is then converted to lithium carbonate or you can take it another step further and convert it to lithium hydroxide. At the moment, for example, the brine producers in South America, they're tending to produce lithium carbonate on site and then ship that product for conversion to lithium chemicals with the specs that are tailor-made, if you like, for the end user, the lithium ion battery producers. So yeah, look, they're a little bit different, and there's also another processing route which is called sulfation roasting that's been trialled at the 3rd most advanced lithium sediment-hosted lithium deposit. That's actually in Mexico, and that's called the Sonora deposit. and that way that you've got a higher energy, higher if you like, upfront costs of extracting the lithium from the ore. But that processing route, in layman's terms, you wind up with a less contaminated PLS, which is easier then to purify to a battery grade product. So, as I said, there's been a lot of none in commercial production yet. Those three are very close. Ganfeng recently took over the company that owned the Sonora deposit, so Sonora, Rhyolite Ridge, and Thacker Pass have all been running pilot plants, for the last 3 to 4 years, producing chemicals for end users, to lithium chemicals for end users to have a look at, and so we're pretty confident, based on the work that they've done, that both processing routes are largely de-risked. We have to do more work on ours to make sure that we can wind up with a similar, a saleable product at the end of it. And so metallurgy is a big part of our ongoing de-risking, if you like. And in fact, we've got, sort of test work ongoing, underway at the moment. So.
And then in terms of the development itself, you've got 10 million tonnes at the moment. I know you released your scoping study. Couldn't go too much into the specifics, but at the moment you've got an extensive drilling campaign underway, resource upgrade potentially inbound, and also seeing the indicated, inferred potentially transferring to the indicated. Can you give us the insights into how the drilling campaign's going and what investors should be looking out for as a result start to come to market?
Yeah, no, they're good questions. So we announced late last year that we had 39 new holes permitted at McDermitt because of delay in permitting, which in large part was due to COVID, and then difficulties in securing a rig, to complete all of that drilling last year. We drilled 12 holes, of which 11 were completed and 1 was abandoned. And those holes were mainly at the northern end of the deposit, where we are looking, as you said, to convert inferred resource to indicated. And this is part of the issue we had with the scoping study. Our scoping study that came out in September last year, there was the ASX felt that there was undue reliance on inferred resource. And so they heavily redacted most of the announcement. So a lot of the stuff that's in the scoping study was not able to be announced to the public. I mean, we were able to announce we did the pit optimizations on $11,000 a tonne lithium carbonate. That's currently around about the $70,000 a tonne mark, depending on where you source your price from. I think Fast Markets this morning was $73,000 a tonne. The strip ratio was, as we expected, was low, given that the deposit sticks out of the ground at 1.2. The metallurgical recovery was 81%, and the head grade of the material, fully diluted, delivered to the plant was just under 1,800 ppm, so which was a significant increase on the overall resource grade that we'd announced. So that we were able to announce. We're also able to announce that the project was cash flow positive. So that was pretty encouraging, given that in retrospect we used a pretty low lithium carbonate price to, and also that the project, even though we couldn't be specific about the project life, that it had the potential to generate lithium chemicals, lithium carbonate for US market for decades. And that's like decades and decades. It's potentially got a really long mine life. So they're all very positive, but we know what we have to do to be able to get those metrics into the market. We have to, as you said, convert inferred to indicated. In a few areas, potentially convert indicated to measured. And so once we've got a predominance of measured and indicated, and only maybe a small reliance on inferred, the ASX will then allow us to put a lot more information into the market for investors to digest. So that's we drilled we completed 11 holes in December. We announced the results from those, and we expect to announce a resource upgrade incorporating those 11 holes, or 11 and a half, because one was abandoned at 32 odd metres. We expect to put that into the market. Well, it'll be early next month now, so early June, and then be drilling again the remaining holes, so 28 to be completed, including the one that was abandoned. We're going to re-drill that one. We expect to be drilling those in September, and so we'll see then assay results from those. Probably given the lag in assay turnaround at the moment, you'll probably be seeing those in November, starting to come through November, December. And then looking to a resource upgrade, a much bigger resource upgrade, we hope, in the start of the March quarter. So.
Fantastic. That's a good overview of the timeline and the key things to look out for. I did want to ask you as well, I think most investors are starting to be familiar now with the story of the localization of supply chains and the importance of securing strategic minerals. We recently saw the Defence Production Act be invoked, but I'd love to ask you, what are you seeing on the ground over in the US, and what's the industry and the trend starting to be with so much of the focus on lithium and the broader EV battery supply chain?
Yeah, look, the US has got a bit of a dilemma, because historically they haven't been, as much of a mining nation as, say, for example, Australia or Canada, for that matter. And I guess they've relied on friendly countries to supply them with their minerals. But I think recent developments, obviously, China dominates the processing and more the increasingly the upstream sourcing of lithium too, in Africa and in Australia, and we're seeing them move, quite aggressively into Argentina. I think that's brought a bit of focus to the US regulators that they can't rely on the lithium just coming to them and coming to them from friendly countries. They need to secure their own domestic source of lithium to actually have that security of supply. And you mentioned the Defence Production Act being invoked. That was, I think, a significant milestone, and we regard it as highly encouraging. Because that act was originally invoked during the Korean War to ensure that the US military effort had all the strategic materials, minerals, etc., metals that it needed for the war effort, and so it's a pretty powerful act. And so look, that's very encouraging. I mean, the other thing that, and it kind of sheets at home the stats, benchmark minerals who are we respect very highly as being across the supply demand sort of world, lithium space, very highly respected. They've presented to the US government on the strategy and pointing out that if you like, some of the exposure that the US economy has got to critical minerals, and pointing out that they need to address that. They recently came out and said that, look, the US currently produces around 5,000 tonnes of lithium carbonate per annum, and they are going to need something like 340,000 tonnes of lithium carbonate per annum by 2030. I mean, that's not far away, and where's that coming from? Well, they've got a domestic, very long life, potentially very long life source of lithium in the Western United States, not just our deposit, but the obviously Ioneer with their Rhyolite Ridge deposit, Lithium Americas with their Thacker Pass deposit, and a few others that are emerging, and these deposits do have the potential to I won't say make the US self-sufficient, but certainly reduce its reliance on supply from countries who may not always be friendly. So.
And that obviously really wraps up the McDermitt Lithium project, but Jindalee does have a number of other projects, as you mentioned, splitting them out, potentially considering a demerger. Did you want to give some color to investors about what that process is and the strategic rationale behind that?
Yeah, no, that's another really good question. Look, we have been quietly accumulating very strong land positions in Australia, and particularly Western Australia, over the past 5-6 years or so. And the main area we've been focusing on has been the Widgie-Multha district, which sits south of Kalgoorlie, around, as the name suggests, the Widgie-Multha town site. We've got 1,000 square kilometres there, all 100% owned. About half of it's been granted, the other half still an application, but we're the for the most part the only applicant for the ground. And that ground is highly prospective for nickel, for gold, and also for lithium. In fact, we've got nickel mines. We surround nickel mines. We've got gold mines a stone's throw from our project boundaries, and we've got lithium discoveries very close and a long strike from our current tenure. So and mines as well in the vicinity. So look, it's highly fertile district. As I said, we own it 100%, but we don't believe that the value of that project, and also our other Australian assets. It's not the only one we've got. We've got other assets as well that we really, we value highly, but the market we don't believe they're currently in the Jindalee share price. So what we're looking to do is to put those, all of our Australian assets into a separate company, and that company will be, the aim is to list that on the ASX as a separate dedicated Australian exploration company. That will be led by Karen Wellman, who's currently our CEO. She'll be the managing director, and also Jimmy Tom, who's our exploration manager. So Karen and Jimmy will basically comprise the executive team for the new company, and we haven't specified exactly what the distribution will be, but we have said that there'll be a demerger and there'll be a distribution of the shares in the new company on a pro rata basis to existing Jindalee shareholders. So, and that will appeal to a different sort of investor, at the moment, and it'll also make the messaging on Jindalee, which will be then a pure play US lithium company. It'll make that messaging a lot easier and probably make us a lot more attractive to North American investors. And the same, we think Australian investors will get the Australian exploration spin out, and we think it'll be a case of 1 + 1 = 3.
It's an exciting story. We'll continue to watch how it evolves. Evidently, there's a lot of irons in the fire. Did you have any final reflections that you wanted to share with current ASX JRL shareholders or potentially prospective investors who might be looking at the story now?
Yeah, look, we've got a presentation which will actually probably be updated next week. Keep an eye out for that. But what that does is, there's one slide in that where we compare our market capitalisation against our peers in the sediment-hosted lithium space. And one of the takeaways from that is that there's 3 explorers in our peer group. So basically, there's some advanced companies, as I mentioned, which include the Sonora deposit, the Thacker Pass deposit, and the Riot Ridge deposit. But there's also 3 companies that own projects that are kind of similar emerging sediment-hosted lithium projects. They're currently valued at, on an average, the emerging group, at about $414 Aussie a tonne of lithium carbonate. We're trading at $19.80, I think I worked it out, as per tonne of lithium carbonate. It does, give shareholders a bit of a feel for the potential re-rating that could happen to Jindalee once we become a pure play and we start marketing the company more to North American investors. So there's that, and also that management have skin in the game. We basically, the board and executive team own about 30% of the company, so we think like shareholders. So any prospective investors or existing shareholders, for that matter, they can rest assured that anything we do will be in the best interests of shareholders because we're shareholders. So, that's a pretty important message. Not many companies you see out there with as much management skin in the game as we've got in Jindalee. So.
That is the Jindalee Resources story. It's ASX JRL. Thank you for joining us, Lindsay Dudfield. There is so much going on. We'll continue to watch how the story evolves from here.
No, appreciate your time. Thanks very much for that. Cheers.